Today, I haven't done a webinar for FX Street for a very long time, and I need to restart them. So thanks for joining me on the first one for a very long time. I'm going to go through. I don't know if you've seen any of my webinars before. If anyone has, let me know. And if you haven't, well, basically, I do like to answer questions. So anything that you have to ask me about technical analysis, please do post a question. I'll do my best to answer it. I've been doing technical analysis for about 15 years. I have been a trader since 1987. I started on the London International Financial Futures Exchange about 36 years ago. So I've got a fair bit of experience, and hopefully I can answer your questions. And if you've got questions not just about technical analysis and charting, but if you're struggling with any issues with your trading, whether that be trade management, account management, trade execution, identifying low risk trade opportunities, anything like that, then I'm ready to answer your questions. So what I'm going to do is, I'm going to show you, this is a trade sheet that I do for my subscribers and for myself every day. So it's quite a big sheet. I do often have quite a lot of trades on there, as you can see. So the new trades for the day are the ones that are in yellow down the side, and I'm going to run through some of these trades that I've put on the sheet, and I'm going to show you why I've identified them as trade opportunities. The ones in the purple are trades that were executed yesterday and the targets were hit. The ones in green are the trades that were triggered but the targets were not hit, and the ones in orange are the trades that were triggered and were stopped out. So my subscribers get this every morning. If you followed me on FX Street and watched some of and read some of my reports, you're probably familiar with this kind of trade sheet that I create every day. So the first thing I'm going to look at is gold. Gold has fallen significantly, and we were short gold on the break. Well, I'll show you where and why. So gold, I'm going to actually show you some important things with gold. I'm guessing everyone's interested in gold. Most people are when I do these webinars. Just let me know if you are interested in gold, and then I'll spend some time on it, because if you're not interested, I don't want to waste your time. So gold is we have a triple top pattern here. Yep, gold. Okay, thanks, Charles. Okay, great. Right, well, I'll spend some time on gold then, because if you haven't been following me on my YouTube channel, you probably won't know what I've been looking at for several months now. So this is the weekly chart, and for me, this has been a triple top risk for quite a significant period of time. You can see that going back even just to 2018 or 2015, the market was in a really good run. We had a correction, and then we've basically got what could be a triple top pattern. And when you look at the candles on the monthly chart and on the weekly chart, well, the monthly chart candles can be quite negative, and on the weekly chart, you can see that it's probably a triple top pattern. We don't, until it breaks the neckline of the pattern, we don't have the confirmation. So actually, we need it to break below $1,600 before we've got confirmation of a triple top, and then we could be falling to around $1,200. So there could be quite significant downside for gold, and certainly since the potential triple top pattern has formed, well, it's starting to look pretty weak, isn't it? We broke the 100-week moving average, which had held well earlier in the year. We're now testing the 200-week moving average, which is a good support level, and I've actually got that on my sheet, as you can see here. Can you see the sheet? I think you can if I'm sharing the screen. If you can't see the sheet, let me know, but you can see that gold, I had a buy level at 1814, 1810, with a stop below 1805, and my targets are 1825, 1835, and 1845. You can see it great. So now I'm going to try to explain to you why exactly I have. Firstly, I'm going to explain why we were short, and that was simply because we had this triangle pattern on the 4-hour chart. Now I've got to keep switching backwards and forwards like this to my charts, because I can't get everything on one screen. So we had established this very clear triangle pattern since May in gold, and it was holding the trend lines beautifully, except this point when we had this false break above. And I must admit, I was trying a short there and we got stopped out, but that's just the way things work with trading. Once the market then closed back below the trend line, it seemed fairly obvious that gold was going to come down. We broke this trend line, 1909, that was the first signal. we broke the second trend line, and we had plenty of time to get into a short position because we dropped and then retested it, classic retest, and then bang, we dropped. So that's worked really, really well. That's gone according to plan. And although we've got significant momentum to the downside, I decided that we should probably try a long. The 200-week moving average on the first test at least is probably worth a go. And of course we do, and not of course, but we do also have a trend line going down here. We're getting quite oversold on the daily chart. So I thought, okay, probably worth a long down here. So as I've shown you on the trade sheet, I've got 1840, 1810 as a buy level, and so far it's holding. Yesterday we just kissed 1814. I'm not sure if we've even touched that level today, have we? No, we've only got to 1815 and a half. So I think that there is a good chance of a recovery now in gold. I'm not talking about a bull trend that's going to be sustained. I'm talking about a bounce that I would be happy to sell a short position into when we get to resistance. Now, on the very short term, hang on, I need to put that down. Ooh, there we go. In the very short term, I use Fibonacci levels a lot, by the way. So I've just taken the previous swing high on the hourly chart, and that's giving us a potential target if I'm right. And look, this could actually be a small double bottom here as well in gold. So it's kind of now like, you know, my scenario of a bounce off these support levels is possibly starting to play out. I like this potential double bottom pattern, which should easily target 1845 on the bounce. So that's my scenario. That's where I am right now. Although we haven't really tested my buy level yet, we haven't really got down to 1814, 1810. However, I think we could be on for a recovery now in gold, and I think 1845 looks like a realistic target. It's my fib level, but longer term we could even retrace the whole of this down move. I don't know with what speed. I don't know whether we can retrace it in a sort of V-shaped scenario, but I wouldn't be surprised to see the market come up and retest a sort of 1870, 1875 area, and I would be getting into a short position there. Looks like a really strong resistance level, 23.6% fib, the trend line on the 4-hour chart. So that's my scenario for gold right now. Longer term, I don't think that this is going to hold forever. I'm buying this support level on the first test, maybe the second test, and I'm kind of getting a confirmation from that potential double bottom that we're seeing. You can see the long lower wicks on the daily candles here in the oversold situation. So I think that we could bounce, but I don't think it's going to hold forever. I think longer term, gold will probably break down through 1810 and will head south. So I'm seeing this as a short-term trading opportunity. Oh, by the way, if there's any markets, say for example, something that you're trading or something that you're looking at in depth, then let me know. And if you'd like me to have a look at it, I'll certainly be happy to try. I do have a trading WTI crude, I believe. Oh no, I don't have one on there, but I probably should do. Dollar yen. Okay, yeah, that's a good one. I'm just seeing that oil's breaking down now through my support level. So if anyone's interested in that, I can go into it further. But if you're not, then let's have a look at dollar yen. Dollar CAD, dollar yen. Okay, yeah. Okay, so we had potentially some interest in, the Bank of Japan may have intervened yesterday. I don't think we're quite clear on whether they did or not. WTI, okay, I'll go back to WTI, Andrew. And, well, 150 seems to be the line in the sand, or has been speculated that that is the line in the sand for the Bank of Japan, where they will defend the yen against the dollar again. And it looks like they may have stepped in yesterday. So interestingly, from a technical perspective, things worked out quite well. The levels held. So we've had a good run up. I've just taken some Fibonacci levels from the swing low in January. So I'm encompassing the whole of the up move for the dollar yen this year. You can see that 144.75 would be a pretty good support level purely from the 23.6% fib, coupled with the swing high there in late June and the swing lows here in mid to late August. The price action is most definitely suggesting that that would be a big support level, but we're a way off from that right now. So that's pretty much all I can get from the daily charts. We're going to have to move down into some shorter term charts, and you can see on the 4-hour chart over there. It'll be interesting to see whether, now we've bounced back significantly. In fact, we're close to the open. We're not far off the opening level for the dollar yen for the week. Now, it will be interesting to see where we close. If there is some follow through to the downside, for example, if we close below 148.24, which right now is quite a way away, that would be a bearish engulfing candle. And if we close below 147.31, that would be a big bearish engulfing candle because it will have engulfed the two previous week's price action. So that's just something I've got in the back of my mind. That to me would be quite a significant sell signal, but there's nothing else on the weekly chart pattern wise that is going to give me a clue as to where we're going in the future. There's the hourly chart, massive candle, but I'm not going to focus on that. I'm going to focus on the 4-hour chart. For me, this is where it's all happening. 4-hour chart is a bit of a go-to chart for me. It's the prevailing trend. It's for the time periods that I trade. So I do focus quite closely on the 4-hour chart. It gives me some good signals generally. If you're a scalper, short-term trader, then this wouldn't be probably so useful, but for me this works quite well. Okay, now coincidentally on the 4-hour chart yesterday we had the 200 period moving average on the 4-hour chart working beautifully as support. You can see the market spiked down and buyers came in at that level, and it was just above the 23.6% fib. So that low $147 area is certainly has proved to be the support level that it should have been based on those technicals. Do I think the market will retest the tail of yesterday? This is a real tricky one because it's not normal market conditions. This is Bank of Japan intervention. From my experience, when there is central bank intervention, they don't intervene one day and then defend the currency and then just keep coming in day after day. What they're trying to do is send warning shots to speculators that if you keep trying to push the yen lower, we will step in and you could lose significant amounts of money, because obviously yesterday any longs here were battered when the market dropped. How much did it drop? Let me just remind myself. It dropped nearly 300 pips. So, you know, that would have triggered a lot of stops and caused a lot of losses for short-term traders. But those short-term traders will now have it in their mind that they can't push the market through 150, or they may be punished. So yeah, I think we could start to, well, certainly consolidate. I wouldn't be surprised to see us. This has probably established the range now. We could hold within this candle that we have on the 4-hour chart, or even on the daily chart. We could hold that range for quite a while now. I hope we don't, because it'll be boring. I don't like consolidation patterns. I don't like it when we just range, but it is starting to look like that could be the case. And I wouldn't be surprised to see us retest the tail. Yeah. And I would suggest that we've got strong support down at 147.40, 147.10 in that range. But I can't tell you how quickly or when we're going to retest it. We do seem to be holding the 50. The black line is the 50-day moving average. And you can see just going back, the 50 period moving average on the 4-hour chart. And you can see just historically, this black line has worked well as support here. Certainly it worked here as well. Then we broke. It didn't do so well there when we were trading sideways, but that's what happens when markets are not trending. Moving averages don't do so well. As soon as we started moving up again, we got some good. It certainly worked as a good support level, didn't it? The 50 period moving average on the 4-hour chart. Now it seems to be working well as a resistance level. So the question is the new range going to be something from the low $147 area up to the low $149 area? Maybe we're going to be stuck in this 200 pip range going forward. For me, that is the scenario that I'm looking at right now, until I can get a pattern or some other indication of a development. But that's based on the fact that the Bank of Japan probably intervened yesterday. That's as good as I'm going to get right now. Obviously, break below 147.00 would lead us to believe that the market could sink further. And if we retest 150, well, everyone's going to be nervous that the Bank of Japan is going to intervene again, and we could get a double top. But for now, we're just having, we're just holding in a fairly tight range after yesterday's intervention. So usually I like to go into far more detail, but I just can't now. We've got this enormous candle and we just have to see which way we react. I mean, if you said to me, you have to put a position on right now, I guess I would probably short it because I think that we could hold that resistance level and I would look for a drift down, but I don't think it's going to be a quick move down to retest that support area. Okay, I'm going to go back to oil. I'm going to look at it from the weekly chart. Okay, so oil on the weekly chart had a really good support level down around the $65 area. We had I took my fib readings from the negative $40 low, which is insane to think that oil traded down to minus $40. I'm sure you are all aware that it did do that and what happened. And then of course it rocketed and went up to 130 bucks. So using my Fibonacci levels from that massive low to the massive high, we had 38.2% fib at around $65, and that turned out to be a really good support level, which wasn't a surprise because we also had the 200-week moving average and the 500-week moving average. So this was a really big support level and almost and a decent double bottom as well. So we were getting long down there, but I'll be honest with you, I ended up getting out of my long position here. We spent so many weeks going sideways, I just thought this is just not going to happen. And it wasn't until we broke above what was a trend line there that I realized that oil was going to continue up. Anyway, we have continued up. This still looks quite positive for me. I know we're down today, but in the long run, I still think this looks quite positive for oil. We should have good support around the $84, $83 area. We may not even drift back that far. The fact that we've broken above this zone, I think looks quite bullish. I'm a bit surprised that we haven't seen greater follow through to the upside. And I would be a buyer if we get down around the $84, $83 area. That's really all I can get from the weekly chart. Would ADP data impact gold? Remind me, what was ADB? I don't know what that is. You have to tell me. Okay, so oil is having a bit of a correction to the downside. I'm again going to rely on my fibs there and there. Okay, so we are hitting 86.62. That's a 23.6% fib. It's a bit tricky. There's nothing else there telling me that crude is going to hold this support level. I need to see something else. I need to see some sort of trend line. We're not even that oversold on the daily chart. We're not even that, well, there is a slight divergence on the 4-hour chart. I'll have a look at that in more detail now. But there really isn't anything else telling me, ADP employment comes out tomorrow. Is that right, or is it out today? No. Well, sorry, I've gone off on a tangent now. I'll come back to oil in a minute. My understanding would only be that the ADP employment number would impact our perception of where interest rates are going. So if it was a strong number, in other words, if there was strong employment, then it would be, it's out already, is it? Okay, well done. Well, I don't, okay, what is the number? Do we know? Gold's going up. Let me see if I can find out what the number is, and then we can go into it in a bit more detail. Markets, global market. Okay, I don't know what we were expecting. If gold is going up on the back of that number, then I'm guessing it was a weak number. Let's have a look. What's the dollar doing? Oh, okay, it was a weak number. Okay, so this is quite interesting. Let's go into it. I will come back to oil. What's the dollar index doing? Okay, so the dollar index has dropped off a little on that ADP number because it was weaker than expected, which means that there will be speculation that the Fed will not raise rates any further and may even cut earlier. So that's why it's weaker for the US dollar. Funds would flow out of the US dollar, and that's why it's been bullish for gold, and gold is now having a good run up, which is helpful because I talked about how gold should probably go up. So yeah, I'm sure you understand this already, but as someone asked, I will answer it. And when you get a weak, a number that indicates potential weakening of the economy, which of course a less strong employment number does imply that less people are getting jobs, and therefore the economy could be slowing. And finally, interest rate rises are having an effect, and employers are cutting back. So that would indicate that perhaps interest rates have peaked, which would be negative for the dollar, because currencies tend to be strong when interest rates are going up and less strong when interest rates are heading down. Will the impact be mild or strong? Well, we've had the impact, haven't we? And it is a significantly out of line number, but the ADP employment number is not as important as the non-farm payroll number, and often they don't line up. From my memory, I'm not an economist, and I don't take great notice of these numbers and how they form a consensus for whether we're going into recession or not. But my understanding is that the ADP number is not. It says that's private employment only, so it's not as important as a non-farm payroll. And just because we've had a weak ADP number doesn't automatically imply that we will have a weak non-farm payroll number on Friday. So don't read too much into that, but certainly it's an indication that the economy could be weakening. And I think the Fed, one of the key things that the Fed wants to see is weakening employment, to feel like they've really got on top of the inflation problem. So I don't know, if you've got any more questions on that, let me know. But certainly weaker dollar. So that's caused gold to go up. Right, where was I? I better go back to oil. Be interesting to see what the effect on the stock market is. I would, although it's indicating a potential weakening in the economy, we have this perverse reaction whereby a weakening economy can actually be strong for stocks, because the stock market is looking ahead and thinking we're going to get a cut in interest rates. And when you get a strong number, a number out indicating a strong economy, it does the opposite, which is kind of reverse logic. But okay, so oil, it looks like it has broken down through my support levels. It's even breaking down through 87. Well, no, it's not breaking through 87.62, but that will be key. Now, for some reason, I don't think that is as important as the number I'm going to show you, as the level I'm going to show you on the 4-hour chart. Normally the daily chart would take precedent, but when you look at the price action compared to, right, so this is the 4-hour chart. I'd almost argue this is a head and shoulders pattern. It's a weak argument, but anyway. So we're at quite a critical point. We have broken the 23.6% and the 38.2% fib levels. So I'm going to put trend lines all over this now. There we go. In the short term, it does look like there is definitely downside pressure. We've got this triangle. So far, we're just about holding that lower trend line. We bounced back above it, but I don't like the fact that we are below these previous lows. What's this? I don't like the fact that we're below these swing highs around 88.00, 88.10. So I just I think we've got pressure, short-term pressure to the downside in oil, even though in the longer term I think we're going up. Now, we break below 86.50. That's going to add pressure to the downside, and certainly the mid $84 region looks like a reasonable downside target. I talked about on the weekly chart how 84, 83 would be my buy zone. So that kind of ties in. The short-term charts are tying in with the longer-term charts. The short-term charts are suggesting that we could get down to the 84 area. The weekly chart isn't necessarily suggesting that, but it's certainly suggesting that the 83, maybe 83, 82 rather than 84, 83. Yeah, I would say sort of 83.50, 82.50 would be the buy level for me if we do collapse. This low number also showing in the economy and recession fears, so gold may not be able to grow well. Yeah, I can see your argument, but I think the argument that gold does well in an inflationary environment doesn't really work. I know that gold is supposed to be an inflation hedge, but it hasn't really worked, has it? When you look at gold over the last, and I'll go back to my triple top on the weekly chart. Where is the weekly chart? Oh, I'm looking at crude oil. Let's go back to gold. So for the last, 2 years, we've had rising inflation. Well, we haven't managed to beat the 2020 high of 2072. We've tested it 3 times. So inflation has been rampant over the last 3 years, and gold hadn't broken the previous high, and that high was not reached, was not triggered by a high inflation number. The high inflation came afterwards. So I think gold bulls, gold bugs as they call themselves, would be pretty disappointed with that. If you bought gold back in 2020 expecting inflation to go to double digits, you would be very disappointed indeed. So I don't really buy the argument that gold does well in an inflationary environment because interest rates go up, and then what's the point in holding gold when you can put your money in the bank now and get 5% return? Silver can go to 2200. Can it? Let's have a look. Let's have a look. Well, it could do, yeah. I think I got that on today's report, actually, did I? Am I? Yeah, I've got that as a sell level. 2190, 2200. I have as a sell level in silver. If we get there, I'm not saying that we are going to get there. The levels that I put on my sheet are not guaranteed to be triggered. They're just levels that I would sell. So we've managed to get to the first target for silver, but we're struggling there. If we get to the next target, which is around 21 sort of 85, 2200, then we have quite strong resistance up there, just below the break point of the trend line. It's the 23.6% fib. I think if we get there, we've probably done enough. But I'm not so sure we're going to get there, quite frankly. Okay, I've done that. I've done gold. I've done silver. If there are any more questions on silver, I think silver is heading lower. I don't see anything particularly bullish about silver. High yields put pressure on all. So yeah, exactly right. That's exactly what I've been saying. Why hold an asset that doesn't give you a return when you can put your money in the bank now and get fairly decent return? Okay, I'm going to move on to currencies. Talk about S&P futures. Happy to do that. So S&P is managing to recover on that weak employment number. So yeah, it is a case of my pleasure. It is a case of stocks reacting positively to potential weakness in the economy, and I think that will be the theme going forward. Stock markets seem to care more about interest rates than they do about the strength of the economy. They assume that interest rates will save the economy. I'm really quite baffled as to how strong the stock markets have been. Okay, so we have had a recent correction to the downside. We broke below the trend line, which looked quite negative, but look, we do have a strong support level around the 42.20 in the S&P, 42.20. This is the S&P futures as you've requested. This is the December futures contract, and we really do have a good support level around 42.20, 42.00, 42.20, 42.10. I could even say. We've got nice swing highs from the price action from February, from April, from May. 4,200 really was a resistance level, and I so remember that level now. We were selling it, and then eventually we broke, and we had to jump into a long position. That was such a great buy signal when we broke up through 42.20. And now we're back heading, we were heading towards 42.20, 42.00. What's today's low? 42.35. So maybe the ADP number has helped the bulls today, and maybe we won't get down there, but we've bounced a fraction off a really good support level. Let me put a trend line on here. Wow, look at that. Okay, so I think that proves it all, doesn't it? We had a trend line. We've got good fib support, Fibonacci support. We've got good support from previous swing highs in the first half of this year. we've got good support from the 200 and the 500-day moving average. You know, this is a classic support level that you just can't ignore. We are in a bull trend in the stock markets. We have been for decades, but even in the short term, we have been since October. So for a year, we've been in this nice little bull run up. And we've really tested, we've got very close to testing a very strong support level. So that's absolutely key right now. If you're looking for an excuse to buy the stock market, well, bouncing off that level is your excuse. If we do come down later in the week, if, for example, we have a strong non-farm payroll number tomorrow and that knocks the stock markets, then watch that level. That's, I'm going to call it 4220, 4200. Anywhere in that region should be a really strong support level. If we break below 4200, this is going to look pretty nasty. That means we've broken the 1 year bull trend. We've broken very important moving averages, daily moving averages. Yeah, we've broken a trend line. So it really is key for tomorrow. If you're going to be trading the S&P, I would suggest that that level is the one that you watch for tomorrow's number. Any questions on that, let me know. I don't think there's anything on the weekly chart that I can particularly show. The weekly chart seems to be developing some sort of triangle pattern again on the weekly chart. Well, I do have this trend line on the weekly chart, and I do have the 38.2% fib at 4202. And we not only have the moving averages on the daily chart, but we also have the 100-week moving average lending support to that level as well. So there really is a heck of a lot going on around 4200. You can see that quite clearly there, can't you? And you know, again, on the way up, the 100-week moving average did a good job as a resistance at those levels that I talked about. And so once we got up above it, we really did soar. So yeah, this really should be a big level. I don't think I can say anything else. On the bounce, hang on. So I would, yeah, I'm just going to get on the hourly chart, put my fib levels on there. I'm going to assume that the S&P is probably bottomed out for now, because we bounced nicely from just above that big level. And I would upside targets. I'm just going to put fib levels on here as well. So you can see that 4300, straight off the bat, you can see that 4300 would be a realistic target. We're only 25 points away from that. And yeah, judging by the little spike lows down here as well, it should be quite a good resistance level. I need more on it. I would like some more trend lines and some other bits and bobs to convince me of that level. So what am I trying to say here? Just let me think this through. I think that we are likely to hit 4300. Whether I would get into a short position there, I'm not really sure that I would actually. Would I? No. I think I would wait for it to come into this congestion zone here around 43.30, 43.40. I think I would feel more comfortable. But look, keep an eye on 4300. It looks like we're going to hit it. I think it will hold on the first test. But again, it does all depend on tomorrow's non-farm payroll number, doesn't it? We could ease our way up to 4300 and be sitting around there for the US non-farm payroll release, which is 2 days time. Check US bonds, 10-year and 5-year. Yeah, I will do that happily, but I need to get them on my price. Do you want me to check the yields, or do you want me to check the price? Do you know what I mean? The price chart or the yield chart? Yields, okay. Toolbar. So US 10-year benchmark. That should be it. No, that's the price, not the yield, isn't it? How do I get the yield? 10-year You're going to have to help me with this. Yield index, that's not what I'm looking for, is it? Okay, let's have a look. No. Ten-year T-note. No. I don't know how to get the yields up here for some reason. Why isn't this working? Normally I actually look at the yields and I don't look at the prices. US 10-year. Yeah, I'll look at cable, no problem. I want an ETF. Forward swaps. Okay, I'm just going to have to go with this at the moment. Oh, what am I looking at? This is the yield, sorry. Going nuts. I don't know why it was showing me 93 whatever down there, and then up here it is showing the yield. Okay, so I'm going to have to go all the way back to the longer term charts. I'm probably going to have to go back to the monthly chart. I will have time for cable. I'll make sure I've got time for cable. Right, I'm going to go to the monthly chart. Okay, that's as far as we go. Where do we go back to? 1970, 1980, 1981. Right. We have to put the fibs on there. And I'm going to take the second set of fibs from just around the 61.8. Okay, so the yields have really broken higher, well through 4.1%. And we're tearing up. And well, when you look at that monthly chart, it doesn't give you any, it doesn't say anything, it doesn't look like yields are going to stop going up. I mean, we've broken above some very serious trend lines here. Yeah, that's a very serious trend line. And look, on the monthly chart, look how the moving averages are turning. Okay, that's enough for the monthly chart. It's probably a bit too longer term, but I needed to see that. On the weekly chart, there is nothing to indicate that these yields are going to stop going up. 5.25% looks realistic. That would be another 0.5% jump. Okay. Oh, your screen is not moving. So you're not seeing me flick from different time periods, no? If everyone else is, then I would suggest maybe you log out and log back in. Okay. Okay, everyone else is. So Malik, can I suggest that you log out and log back in again? I don't know what else to suggest, I'm afraid. Okay, thanks guys. Everyone else seems all right. So, now I need to start throwing some trend lines on here and get a grip of where we are. Nice break up there. Wow, these rates are almost going parabolic. It's incredible how the stock market has held up so well when you've got 10-year yields that have broken above the 2022 high. 43, 433, and we've been up to 488. Wow, I don't understand. But then again, when do markets ever make sense? Yeah, look, everything is saying to me that there's nothing telling me that we're going to collapse. So I'm really having to look at longer term charts here for obvious reasons. We're hitting new territory. So Yeah, I don't see anything telling me that yields are going to turn around and go down. We're very overbought on the weekly chart, but that doesn't mean anything. Well, I wouldn't be surprised to see 5.25% rates, which is another 0.5% up. And I can't understand the logic behind that, because I personally think that we will head into a recession. We've got a bit of an oil shock as it is. Okay, well, look, we're in a very strong bull trend. We seem to be accelerating to the upside in yields. From a purely technical perspective, I don't see any reason why we're going to turn around and collapse. I don't know what else to say. I'm actually quite shocked at that, to be honest. I thought that we were near the high in yields. I must admit, I've not been keeping track of it. I didn't realize we'd broken above the 20. I didn't realize that 10-year yields have gone so far above the 2022 high. It's just not something that's been on my radar. We've got, we've got a pullback today on the back of that ADP number, but one number doesn't change an awful lot. So yeah, it is shocking. Really is shocking. Okay, well, look, I can't really say anything else. We're in a strong bull trend. We've had a bit of a pullback on the ADP number. Obviously, the US non-farm payroll number is now going to be key. We've got yesterday's low at 466. So if we close below today, if we close below yesterday's low at 466, then I would change my tune and I'd say we probably peaked, at least in the short term, because we'd have a bearish engulfing candle. But apart from that, I don't see any reason for it to turn around and go down right now. Now that's very interesting. Okay, I'm going to get onto cable. Now, my pleasure. That was interesting. I'm glad you asked that question. Okay, now cable has collapsed. I'm going to show you why cable's collapsed, and this is really interesting. If you don't know why cable's collapsed, there is a technical reason, and it's just dead simple. Now, this is why you've got to look at weekly charts. Even if you're a short-term trader, you have to look at weekly charts. And in this case, I'm actually looking at the monthly chart. Now, if you didn't look at the monthly chart, you would have absolutely no idea why, from a technical perspective, yes, the MAs. So I use the 50, the 100, the 200, and the 500. Now, they're all very basic. The reason I have these very basic moving averages, and I don't use SMAs I do use SMAs. I don't use weighted or exponentials. I look at so many different markets. So I can look at 30 currency pairs a day, and I also look at 5 stock market indices, futures. I look at gold, silver, oil. So for my subscribers and for my own trade sheet, for example, you can see here that I've chosen trades in a number of currencies. Now, most of them won't get hit, and I had intended to work my way through all of these markets today and show you why I chose these levels and which trades have been executed and which trades are winning and losing, but we haven't had time. Sorry, where was I? So now, I use the 50, the 100, the 200, and the 500 because that tends to just work across the board when you're looking at so many markets. If you are, and I really hope you're not looking at 30 markets, it's totally unnecessary. I'm hoping that if you're trading, you're looking at 2, 3, 4 markets, then get your moving averages set that fit A, the market that you're trading, and B, the time periods that you're trading. So, if you're a scalper and you're looking at 30-minute, 1 hour, whatever, 4 hour, then have a look at your moving averages and play with them. So you do get things like this. Look at the blue 100-month moving average. Look how nicely it's caught these moves, these bounces in the bear trend. That's the kind of thing that you want your moving averages to be doing. You want them to be working as support and resistance levels. Now, they're not foolproof. They're not going to work you can't fit a moving average so it fits every swing high and low. But certainly at the moment, the blue 100-month moving average is working. Now, Again, going back to 2000, you can see why I did. You can see that from 2000, we've been going sideways quite, a bit. That was the major swing high, and gold has been in a 2000. So we're in a 25 year bear. 2008. Okay, so that was a global financial crisis. We are in a 15-year bear trend. Now, this debacle with Liz Truss down here was when the pound got walloped and then suddenly turned around and went up. And look at how beautifully it touched the 23.6% fib. I had a second set of fibs here from the 61.8% peak, and that gave us a fib of 129.83. So we had 129.26, 129.83. We had the 50-month moving average at 128.72. We had the 100-month moving average at 132.34. Okay, so that's all within a sort of 300-400 pip range, which when you're looking at a 15-year chart, that really isn't much at all, is it? And on a monthly basis, we spiked above that resistance area, but we quickly came back down below it. Now, we even had a trend line there. We had a lot of resistance. Can you see that? If you've got any questions, let me know. We'd got overbought on the monthly chart. So it really wasn't a surprise to see the market turn around. Now on the weekly chart, I'm just going to check if we had a negative candle. I can't remember whether we did. No, we didn't actually. Look, we pushed up. We had 1 week where we pushed up above through the level, looking for stops probably, and then immediately the market turned around and collapsed. We didn't have a bearish engulfing candle, to be fair, but you can see that we reversed pretty quickly, and that was it. The market just sank. So that, I believe, is the reason from a technical perspective why cable has turned around. Now, do I see any reason to buy it? Not on the weekly chart, not on the monthly chart. Do I see anything on the daily chart? So we have a big move today. Now that was unexpected. Oh, of course, that's because the dollar's weakened on the ADP number. So I did actually, I'll be honest, I had a sell level in there. I've been quite aggressive about selling the cable, and I've missed a lot of it because I had offers in above the market on the way down, which didn't get hit, but it was obvious it was going down. When you're trying to trade a trend, when you're trying to trade a bear trend, you can either decide, right, I'm going to wait for the bounce and sell it, which I was doing too much of, or you can be aggressive about it and say, every time it breaks the previous low, I'm going to get short. That would have been the strategy that would have worked a lot better than looking for a bounce. Here, selling bounces may have worked, but of course, as soon as we broke the August low, the market pretty much just went down in one direction. Okay, we're getting a good recovery now, and from a technical perspective, I don't really know why. I don't see that we. Oh, hang on. That's a lie. We had a 38.2% fib at 120.90, but we did overrun it. So to me, to be fair, I would have said that had been broken. Anyway, we've now got a bullish engulfing candle for sure, because yesterday's candle was so small. So we've definitely got a bear trap, and cable is on the up. So the question now is, how far higher can we go? Which does kind of depend on whether the bull market for the dollar is over. But if bond yields are anything to go to judge by, then the dollar bull market is certainly not over. Excuse me. Right, hang on. The 4-hour chart is definitely the one that I'm going to focus on now for this. So we are going to hit resistance around the 122 area. We should do, and we're probably going to get there because we're only about 30 pips away. We've got the fib there, 122.00. We've got the trend line. I'm just going to look at the hourly chart, see if we've got anything. Well, we're hitting the 200-hour moving average, but that would not be enough to talk me into a short, I don't think. No, I wouldn't sell it just on the 200-hour moving average. So we could easily overrun and get to 122.00. I think we probably will. What else can I say? We get up through there. We're looking at 122. Well, we're looking at testing this peak here, which is what, 122.70. I don't think this is the beginning of a bull run. I think this is a correction in a bear market, and so I would be looking to sell at resistance levels. I don't know exactly which one's going to hold, obviously, but the levels I would be looking for, if you agree with me and you think that selling into the bounce is the right strategy, then 122.00 area looks like the first decent resistance. And as I said, I think we probably will get there. I don't think we're going to be that overbought by the time we get there on the 4-hour chart, at least. So we may eventually get up to the 122.80, 123.00 area, which will probably be a better sell. I'm guessing that we've got the 500-hour moving average somewhere around there as well. Let me have a look. Green line, yeah. I'm going to put some fibs on here as well. I always litter my charts with Fibonacci levels. For some reason, they just seem to work. And when you get Fibonacci level combined with a trend line or a moving average or previous price action or a candle formation or a pattern, then they're pretty powerful. So yeah, 122.80, 123.00 looks like a good resistance level, doesn't it? We've got the swing high here. We've got the trend line on this chart. We've got the 23.6% fib. We've got moving averages on the we've got the 500-hour moving average as well. That would be the big one for me. That would be where I would be really interested in getting into a short position. But again, it's going to depend on the non-farm payroll number tomorrow. So we get a weak number and we could definitely be 100 pips higher and testing that resistance. If you don't think we're going to get up that far, then you might want to start shorting it around 122.00. Does that answer the question? I do think that eventually we will continue lower. Yeah, there's nothing on the longer term charts that indicates to me that we're about to find a low. So you can see if I'm right or wrong as in the days or weeks ahead. You can call me out if I've got that wrong on the next webinar next month. I'm just seeing, do I think this is a good support level, 120 down to 118 or 119? I mean, it is. We've got a confluence of, we've got this band of fib levels and we've got swing lows down there. But it's just not enough for me. I wouldn't be buying it there if I'm honest. Gold expected more correction in October. Well, you know, as I said earlier, the key for gold is the 1814, 1810 area. It's bounced off it, and I think that this bounce has got legs. It certainly has been helped by the ADP number today. I think it could certainly break down below 1800 eventually, but not right now. I think we've got a decent recovery in hand. And again, as I said earlier, I would be interested in selling into resistance levels when we finally get there, but we're not. Dollar CAD, good sell level. Let's have a look. Yeah, dollar CAD's is kind of at a good sell level. I remember from this morning. Now, for me, it's all down to the trend line, and I'm guessing that's what you're talking about as well. Is it? Is that what your motivation for a short position is? Is it this trend line going back to 2020? Because there isn't anything else on the chart that's suggesting to me that it's going to go down. Yeah, the trend line. Okay, good. We're on the same page. Yeah, it's an important trend line, so I'm glad you picked up on it. It goes back to 2020. It's 3 or nearly 4 years old now. It's been tested significantly. I did have a short position in there yesterday, or I did suggest it to my subscribers. I left my stop too tight. 137.00 is the area where we have the resistance. I had a 25 pip stop, which with hindsight was pretty stupid, really, because it's such a big trend line over such a long period of time. The 25 pips is not going to be enough for this. So you need at least 50 pips, I think. And 50 pips is very small, because on the downside, you really could. I probably will try this again. I need to see a daily or a weekly close below the trend line. Right now, we're hovering above a short-term trend line from October. It's a 1-year trend line. So as long as we're hovering above there, I'm not going to be comfortable. I'm not going to be aggressively looking for a short position, but I wouldn't object to being short based on the weekly chart. But if we come back below this peak and this trend line, which is around 136.90, then I would be more comfortable being short. That's all I can say. It's only 23 pips away. It's no big deal. And if you are short, then I wouldn't disagree with your position. But I would suggest maybe above well, definitely above 138.00. But probably above, yeah, I mean, if we rate 138.00, that's miles away. Probably above 137.50. If we start holding above 137.50, that could be a bullish breakout, and we could really go places then. For this to work, I guess we're really going to need to see some weakness in the economy. So you're going to be praying for a very weak US non-farm payroll number to make that work tomorrow. Be interesting. Maybe we'll get it. It could be quite pivotal tomorrow. We do get a weak number. I think the recession word will start coming out a lot more, and rate cuts are going to be talked about. So it would be interesting. Tomorrow could be quite a pivotal day. Let me tell you that stock markets, have I got charts on here? No, it's on the other computer. Stock markets, as you probably know, historically, October, sort of September, October tends to be a month when historically stock markets are rolled over. So could be a really interesting number out on Friday. Okay, that's it. We've got 2 minutes to go. So we've finished. Thank you so much for joining me. Really appreciate it. I'm going to be doing these every month, so please keep an eye out. Please have a look for me on FX Street. I do post usually quite often. I haven't posted recently, so I will get back to it. That's my website. This is my name. I also do have a YouTube channel if you'd like to follow me, if you are not already, which is that. Thanks so much, everybody.